Have you ever stopped to think about what actually makes up the world around us? I mean, not the finished products, but the real, raw ingredients. From the food on your plate to the very device you're watching this on right now, our entire modern life is built on a hidden foundation of raw materials. And today, we're going to pull back the curtain on that hidden world. So let me kick things off with a question for you. What on earth could your high-tech smartphone possibly have in common with your morning cup of coffee? I mean, they seem like they're from completely different planets, right? Well, it turns out they share a really crucial, powerful connection. And that connection? They both come from commodities. A commodity is just a basic good, like coffee beans, copper, or crude oil. They're the raw ingredients that companies use to make pretty much everything we rely on every single day. They are, quite literally, the building blocks of our global economy. But, okay, beyond just being the stuff that makes the world go round, why should investors in particular pay attention? Well, commodities are a huge asset class, and because their prices often move for different reasons than stocks, they can be a great way to diversify a portfolio. They can also be a hedge against inflation, and they're a super direct way to bet on global economic growth. So let's start our journey somewhere pretty familiar, the farm. Our first stop is agricultural commodities. We're talking about all the things we grow and raise, from wheat and corn to cattle and cotton. So what makes the price of, say, corn go up or down? Well, it all comes down to that classic push and pull of supply and demand. On the supply side, a sudden drought can totally wreck a harvest, right? But new farming tech could send yields through the roof. And on the demand side, as economies grow, you see people wanting more protein in their diets. That creates this massive new demand for things like soybeans and corn. It's this incredibly delicate global balancing act. And hey, here's a little bit of industry lingo for you. Traders have a nickname for commodities that are grown instead of mined. Things like cocoa, coffee, and sugar, they call them softs. Just a little tidbit to keep in mind the next time you're enjoying a cup of coffee. All right, let's trade in our farmer's boots for a hard hat and head from the farm to the mine. This next chapter is all about the metals and minerals we pull out of the ground. And these are the materials that are absolutely critical for our modern, tech-driven world. Now, we can basically split metals into two big groups. First, you've got your base metals, things like copper and lithium. Think of these as the workhorses of the green energy transition. They're essential for electric vehicles and solar panels. And then you have your precious metals, like gold and silver, which aren't just used in industry, they're also hugely valued as investments. And this gets to the very special role that gold plays. For literally centuries, investors have flocked to gold as a safe haven when things start to feel a little shaky. During economic downturns or periods of political tension, the demand for gold often shoots up, which just reinforces its reputation as a super reliable hedge against all that chaos. Okay, on to our third and final major category, energy. And honestly, this is easily one of the most important, most traded, and definitely most politically charged commodity markets on the entire planet. It literally fuels everything that we do. Within the world of energy, you've really got three major players. The price of oil is massively influenced by producer groups like OPEC, and, of course, the overall health of the global economy. Natural gas is a bit different. Its market is often driven by seasonal demand, think heating in the winter, and it's super sensitive to geopolitical flare-ups that mess with supply routes. And then you have coal. It's abundant, for sure, but it also has a reputation as the most polluting of the fossil fuels. Here's another fun industry term for you, the crack spread. It sounds a little weird, I know, but it's actually pretty simple. It's just the profit margin an oil refinery makes. See, they buy crude oil, and then they crack it into more valuable products like gasoline. And that difference in price, that's the crack spread. It's a really key indicator for how healthy the whole refining industry is. Okay, so we've been to the farm, we've been to the mine, and we've been to the oil well. But where do we go from here? Well, the biggest story shaping the world of commodities right now is this huge tension between our environmental goals and our never-ending need for raw materials. And this brings us to a really tough question, a really important one. We all want a greener future, right? But can the planet actually handle the sheer resource demands of that transition? It creates this fascinating and, honestly, pretty complex paradox. And this is what's known as the ESG paradox. To build all that amazing green tech, solar panels, EV batteries, we need to mine massive amounts of metals like copper and lithium. But the mining process itself can cause serious environmental damage, often in the very ecosystems we're trying to protect. This creates a huge challenge. How do we balance this soaring demand for green technology with the absolute necessity of sourcing these materials responsibly? It's a question that pits our climate goals directly against their very real, on-the-ground impacts. And all of this leaves us with one final, big picture thought. The history of humanity is really the history of the materials we've mastered, from the Stone Age to the Iron Age to the Silicon Age. Now, as we face these incredible new challenges like climate change, you have to wonder, what raw materials are going to define our future? What will we value the most?